Alright, everybody, welcome back. It's been, I think, 3 days since I last posted. As you guys have seen in the description, in the thumbnail that I put, you guys probably have an idea of what I'm gonna talk about. I'm gonna talk about, what transpired in the last few days, especially the entire week. It's been one of the most challenging weeks for me. Though I had many of such challenging weeks, this especially was challenging because I started to find a good stride with what I'm doing. I've been tweaking my, process towards applying what I've been learning about myself and my trading style. But what happened last week was a test of, who I could be as a trader, who I want to be as a trader. In trading, not every day is going to be a win. Not every win is going to be the way you expected it to be. Not every day is going to be a loss, and not every loss is going to be the way you expected it to be. It's about probability. Trading is about probability, and there isn't a specific pattern to the outcome of your trades. My job as a trader and your job as a trader is to execute on your strategy, execute at the highest level, and making sure that you don't get carried away when you have a win, and you don't get heavy-hearted when you have a loss. And what happened to me last week was a lot of emotional baggage that was adding on to every day as I came into the market after a loss on the previous day. And I'm proud of myself because even though I lost pretty much all of the trades that I placed last week, I'm proud of myself on the way I manage my risk. I know one of those days was what the industry calls a tilt, but the rest of the days I was pretty much managing my risk well. But I'd like to also add that over the reviews that I've done of my trades, I realized that, like I said, what I started off with, that emotional baggage had played a really big role in how I manage my trade and manage my trades the past few days. Out of the 5 days, about 3 days could have been win, but since the emotional carryover from a loss was so heavy, I didn't objectively view my trade while I was in it. I caved in with emotional baggage. I caved in with the emotions of, what if this doesn't work out? Are you going to lose more money? And that question, when it plays in your mind when you're trading, is a recipe for disaster, because you lose objectivity over what you're supposed to do. You're supposed to essentially be looking at what the market is telling you and execute on the market's call. But what happens when you lose objectivity and you cave in to the emotional imbalance, and the questions that pop up in your mind as you end up answering to those questions and you end up losing money. And that's what happened. So that's the pattern that I've seen this week and over the many months. And as a trader, my goal right now, the foreseeable future, is going to be managing my emotional baggages, whether it's going to be an emotional baggage after a win, whether it's going to be or an emotional baggage after a loss. My goal as a trader and your goal as a trader should be to come back every day with a balanced state of mind where you are accepting the risk and you're assuming essentially that you are going to lose that money if the trade doesn't work out your way, and if it works, well, you had a good day. So that's that's all I wanted to tell myself. That's all I wanted to tell you guys, that emotions play a big role. Trading is as much a mental game as a technical game. I have this written next to me which says trading is a pattern recognition and a numbers game. And what it really means is, a pattern recognition is where you find your edge in strategy, and a numbers game is how you manage your risk, what you're willing to risk to make what. So that is trading and in its simplest terms. So that's what every trader should keep in mind when they come back to trade. So with that said, maybe we can go over, I've done a review of my Monday and Tuesday, but let's probably also do a review of my Wednesday, Thursday and Friday. So alright, so I've got my screenshots of, I take a snapshot of my trading day. So this is 9th. Let's go to 11th, because so 11th was a really interesting day. This could have been a very good day, which could have made it was a good day. I don't want to get into the details of how much I could have made and how much it would have meant in my account, but it was a good, there was a good setup. All right, what happened on Wednesday is the market, I don't have my weeklies here, that's the usual way I review with you guys, but since it's a screenshot, I can't show you the weeklies. But if I remember, the weekly September had pretty much sold off, the last week, and this week started to retrace back a little bit, and it had almost reached to the midpoint of how much we sold off on the month so far. And September to me looked like, Wednesday to me looked like it looks still weak, considering the monthly and the weekly. It still seemed like a potential. It still looked like there was potential for it to trend down. But what I was looking for is, if the market sort of gave me an entry downwards, that would be the best possible outcome for me to take on a put entry. And if it had gone up and changed structure, potentially that would also mean that it would come out of the downward channel on the daily and try to reach the weekly downward channel of the past 2.5-3 weeks. So with that in mind, I was hoping for a good swing for me to enter on the 5 minutes. So as the day began, the first bar was still within the past couple of days had been an upward move, and today had opened just at the upper channel line, and the first bar was quite the sell off. And I'm not gonna enter just on that. I was looking for a good swing, I was looking for a good confirmation and a good spot for me to manage my risk. This seemed like a very risky entry because I had to hold it for a very long time to see if it would work out. And the second bar, let me zoom in a little more, and the second bar also started trending down and made a reverse hammer, which is a very nice bar when you're the participants sort of tried to retrace higher, tried to test the opening print of the day, and there weren't many buyers at that level, and the market rejected it, came down, and what it did is not only broke the previous bar's low but continued down and closed at its lowest point. As you can see, there's no wick there. That means that there's more orders below that, there's more people in the auction that are ready to buy at lower prices, and there's more people willing to sell at lower prices. So that's where I took that as a good indication for me to enter, and I could manage my risk well, considering the second bar. And that's where I entered right below the second bar. What happened is the market retraced up, which is good. My exit would have been at the high of the second bar, and what the market did next in the fourth bar was continue to settle down. It was an easy hold. Ideally, what I should have been doing is hold on all the way through, but as I said, I had this emotional baggage of, hey, I lost $850 the previous day. Is it gonna be worth it to stick on and hold on until the market takes me out? And while that was happening in my head, what happened was, instead of keeping my stop loss a little higher than my entry, somewhere at the highs of my entry bar, I sort of, let me draw that here. So when I entered, that's where my exit was, where at the high of the second bar. But as the market kept going down, I pulled my stop loss back to my entry point, and if you notice, the market was consolidating a little bit. Though it was weak, my emotional baggage from the previous day sort of pushed me into pulling it down to my entry point, and I got taken out on that's what I'm trying to get to here. When you're not willing to stick to risking how much you intended to risk, and objectively view the structure, objectively view price action, you're gonna make mistakes like this, which is what I did. I pulled my stop loss down to my entry, though I would add that it's good to pull your stop loss down when your trade has made a good move from your entry. At this point, I think the market moved about 1 point, QQQ moved, Nasdaq moved about a point, and I had about 40% or 35% on my options. But my strategy is to add to my winners and let the trade take me out than exiting when I see weakness. But my mentals weren't right, and I pulled it back to my stop loss, and I got taken out here. But what happened right after that is the price action was perfect for it to trend down, break the channel lows, and continue all the way down. All right, so this was 9/11. Let's go to 9/12. 9/12. The previous day you saw the sell-off that happened, but it, you know, reversed quite aggressively by the end of the day, and the market opened right next to where it had closed on Wednesday, and it seemed very bullish to me, considering September's sell-off had already been taken off, and the QQQ was opening right above where September had started, and that's a good indication because on the monthly, I don't have a chart here, but on the monthly, September had quite aggressively retraced back to where it opened, and August was similar, where it aggressively trended back up to its open, and it was giving a structural sense of the market failing to go lower and continuing higher for a change in structure. With that said, Thursday was also very emotionally loaded. I had already lost the past 3 days and I had taken a very good entry here, but considering the 15, I had taken a very good entry at the break of the second 15-minute bar. My stop loss was ideally supposed to be here, but because of the mental baggage, I decided to sell at the 5-minute stop loss level, and which was a mistake, and missed out on a nice, how much, about 2 points move, which was about 80% on the contracts. So this is another mistake again because of the mental baggage. And Friday was pretty good. I had realized the mistakes I was making. September was getting stronger, the week was getting stronger. I saw strength and potential for it to continue to go a little more higher and test the down 3 or 4 week, actually 3 month downward channel highs. And as the market continued to go higher the first few days, the first 1 hour or so, I was waiting for a break of the channel and continuation from a higher low to a higher high move, and I had entered here and I got taken out right on the entry bar, which was fine because I stuck to my strategy. I didn't emotionally trade because I had realized the mistakes I was making. I was looking at price action and objectively trying to make a decision, and that's what happens, right? You have to accept the outcome. Every day can't be a win, every day can't be a loss, but you have to accept the outcome as you would accept an outcome on the coin toss. It's as simple as that. You wouldn't know whether it's going to be a win or not until you open your hand and see it after the coin toss. So that's all I had to say for today. Let's see what comes next week, but I'm going in next week with a renewed mindset of trading objectively. I'm not going to carry over all of the baggage. I'm going to try to not carry over all of the baggage that I had built the past few days, and focus on price action and execute at the highest level. And I'll see you guys next week with reviews of how I traded. All right, with that said, see you everybody. Bye.